Over the last 1 year also, the coronavirus has caused wide-scale disruptions in day-to-day life of the people in various countries. The coronavirus has led to people facing all sorts of difficulties, not only those related to the health, but also the financial and economic difficulties. The economy of India too has been badly affected by the rampage that has been caused by the coronavirus. Last year, during the first wave of the coronavirus, India's economy shrunk by 7.3% in the financial year 2020-2021. This year as well, the country once again got hit by a more deadly second wave of the coronavirus. This has led to the Reserve Bank of India lowering its growth projection for the GDP for the Q1 of financial year 2021-22 to 18.5% against the previous projection of 26.2%. Similarly, the projection for the entire financial year 2021-22 has been revised down to 9.5% compared to what was forecasted earlier. The effects of the shutting down of the country and therefore the economy because of the severe rise in the coronavirus cases can now be seen in the various indicators such as the Consumer Confidence Index of the RBI, which shows the willingness of the people to spend money, has reached its historic low in the month of May at 48.5. The lower consumer confidence will mean less economic activities. The lack of activity in the economy also means that less number of hands are needed to handle it, which means that a lot of people would have lost their jobs in this recession caused by the coronavirus pandemic. According to the CMIE data, the unemployment rate in India rose to a 1 year high of 11.9% in the month of May. But at the same time, there are a lot of other indicators which seem to suggest that the gloom which the coronavirus has caused in the economy might not be a very long lasting one. Recently, both the Bombay Stock Exchange as well as the National Stock Exchange have crossed the market capitalization of over $3 trillion in the month of May. The indices of both the stock markets are near their all-time high. Similarly, the GST collection in India over the last 8 months has been over 1 lakh crore, including a record high collection of 1,41,000 crores in the month of April 2021. Furthermore, in the last financial year, India has received a record $81.7 billion in foreign direct investment. Although it needs to be mentioned over here, there are chunk of that FDI comes from Reliance selling stakes in its various businesses. Also, in the countries such as US and UK, where the virus has been brought under some control, indicators are suggesting that the economic recovery has already been started. For example, in the US, the number of people claiming the unemployment benefit has now fallen closer to what it was before the start of the coronavirus pandemic. There are positive developments with regard to the spread of the coronavirus infection in India as well, where over the last month the coronavirus cases seem to have been steadily declining. Because of this, various states are now easing the lockdown restrictions. This easing of the lockdown restrictions will obviously spur some activity back into the Indian economy. And to add on to this, the vaccination program in India is also continuing at a reasonable pace. The Prime Minister has recently announced that the government of India will be providing vaccinations to 75% of its people free of cost. Also, I mentioned this in my previous video that the availability of vaccines in India will be increasing significantly in the coming months. This is because of the increased production from the vaccines which are right now available in the Indian market. There is the Covaxin, Covishield and Sputnik, as well as the availability of more foreign vaccines in India and arrival of the new vaccines in the Indian market, such as those from Zydus Cadila Biological E, which are in the third stage of their trials. Now, if India is able to continue its vaccination program at a substantial rate and manages to vaccinate a substantial number of people, it can be expected that, like the US, UK, and Israel, and other countries which have had implemented a reasonable vaccination program, India too will be able to bring the coronavirus pandemic under some control in just a few months' time. And this control over the coronavirus will obviously result in the commencement of the economic recovery in India. But this, of course, is provided that there is no third wave of the coronavirus. But again, it is not unreasonable to assume that the third wave of the coronavirus is unlikely, as none of the countries which is embarked on a decent enough vaccination program seem to have got a new wave of coronavirus pandemic. So if there's no third wave, then it can be expected that the coronavirus will get contained in India in just a few months. But again, this need to be mentioned over here that although the virus seemed to be getting under control, currently none of the countries in the world have become coronavirus free. So, making an assumption that the present coronavirus vaccines, or if required, the subsequent iterations of the coronavirus vaccines, are able to get as good as complete hold of the coronavirus and its various mutations. Now, for example, India has set up a target to inoculate all of its adult population by the end of this year. So, whenever India or any other country is able to vaccinate as good as all of its population with an effective set of vaccinations, then the coronavirus pandemic in such a country will be as good as gone. In such a case, the things in the country will get normalized to what they were before the start of the coronavirus pandemic. Now, for example, whenever India is able to get over the coronavirus pandemic through effective vaccinations, then India can once again start pursuing the targets that it had set for the economy before the advent of the coronavirus, which includes the India's target of creating a $5 trillion economy through projects such as National Infrastructure Pipeline, which is close to a $1.5 trillion project, and schemes such as PLI, which provides an outlay of close to $30 billion for production linked incentives. Furthermore, the way coronavirus has impacted people's life, it is likely that even when the coronavirus pandemic gets over, it will leave a permanent trail in the behavior and mindset of the people. The coronavirus has forced the people to rethink their priorities. Therefore, it is likely that after the pandemic, people will start to spend more time on the activities which they find meaningful. Therefore, it can be estimated that after the coronavirus, the economy is likely to get more vibrant. The Economist in its recent article has also said that the pandemics, when they are over, usually result in economic boom. Therefore, once the pandemic is over, the increased vibrancy in the economy will bring in more economic activity, and therefore we might be able to see some bloom in the economy after the coronavirus pandemic is over.